Good morning, snipers. I'm back with another education session.
Firstly, a brief overview about our community, Sniper Trades. It is a trading education platform dedicated to empowering traders by providing them with detailed insights, strategies, and tools to enhance their trading skills. The core mission of our community is to democratize the trading field by making high-quality, actionable information accessible to traders at all levels, be it beginners or they are experienced professionals. Through a blend of live trading sessions, comprehensive courses, and one-on-one mentorship, Sniper Trades aims to build a community where traders can learn, share, and grow together, helping them to make more informed and strategic trading decisions in various financial markets.
Today, I'm going to talk about 4 mind-blowing confirmation indicators that traders use to make well-informed market decisions. Firstly is the volume price analysis. Second, we'll talk about the MACD. Third, the RSI. And fourth, we'll touch base on the trendline analysis as well. Let's jump right into the first one, which is the volume and price analysis, which is one of my favorite and something that I use on a day-to-day basis to day trade, to swing trade, things like that on different time frames. I believe a volume and price is the only real-time indicator available in the market. By combining these two, traders can confirm the strength of the trends, identify potential reversals and breakouts, and navigate the market with greater confidence. I'll give you certain volume patterns to look for, which are quite easy to follow and to position on the momentum for swings versus the one you do not want to chase in the market. Let's get to see these examples. When we are talking about price patterns, we are basically talking about support resistance levels, trend lines, chart patterns like cup and handle, double top, double bottom, head and shoulders, inverted head and shoulders, 2B reversals, and things like that. And when we are talking about volume patterns, we are talking about how the traders are trying to assess the current trend in the market. Like if the market is falling off, how much are they interested in participating in that momentum? Or if there is a head and shoulders that is evolving, how much are they interested in this particular pattern that is going to be formed in the market? So that is something that gives you a real good judgment as to if you want to chase the current trend in the market, or if you want to stay away and stay safe from the fake out that can be created in the market right now. Here is an example on Nvidia. The first one I'll go over where there is a fake head and shoulders breakdown where we were safe and did not chase it, and I'll also talk about another pattern on the same exact chart where a particular momentum has shifted to the upside and we were able to catch the move to the upside for a good amount of gain. In October of 2023, we clearly see a price action here which shows Nvidia forming a head and shoulders pattern. A head and shoulders pattern is basically a bearish pattern where the price actually moves down or reverses in a short-term trend, right? But then we were not willing to chase this pattern at all. If you see, this is what Nvidia was doing, and we were close to the neckline. But the reason why we did not chase this pattern, or we were not interested in this particular pattern, was look at the volume while the price was moving lower. It was completely tapering off. Yes, the price moved a little bit lower after this huge uptick in volume, but then most of the execution step here was after it broke the neckline. But I was not really interested in really looking after or going after this head and shoulders pattern, because how the volume was tapering off, that clearly shows me a trend that traders were not interested in this head and shoulders pattern even though the price was going down. Fast forwarding to a week later, right, October 31st, let's see what happened there, right? So we did go lower, but then you see as the market was going lower, but then you did see the volume just completely tapers off, right? Yes, the price was going lower, but then the market was just showing that the traders were not really interested in this price action at all. So I was not really interested in looking at this head and shoulders pattern and trying to chase the market here. Rather, I was like, okay, let's wait and see what happens in the market. If there is a reversal, we'll probably play it to the upside when we see an execution step, right? So this is not a place where I'm saying, okay, you know what, I did catch the bottom. But then this is an exact setup that kind of tells me that I did not have to chase this market here, and I can wait for another executable trade to happen. Now, fast forwarding about a month out, that price did not really break down. We are actually moving all the way up again, creating a nice hammer candle. Clearly, it was an indicator that traders were not interested in that price action at all. So that kind of saved me not chase the market there. Now let's fast forward to December of 29th last year, right? You see a clear indication as to, like, you can clearly mark some levels here. Let's draw a trend line. Let's draw a trend line right here where you had a nice reversal here, you had a nice reversal here, and now we are seeing that trend line being tested again and again and again. Now we did have the reversal again. We hit it right back again, reversed again, and the market is trying to go right back up. Let's go a week further. Now we see that clearly there is an interest in this trendline break, right? Like, you see that traders have an interest in this trendline break given the volume increase that we are seeing when this trendline has been broken to the upside. This is where I'm really interested in the market, where you see a lot of momentum or a lot of volume come in on the break of the trendline. I really like to position myself here, right? To play the momentum in the market. So these are your certain confirmations that you can derive from volume and price analysis and try to set up yourself towards success in the market. So let's fast forward again, see what happened if we were right, to see if the market did what we were expecting it to do based on the volume price analysis. Going to the end of January, you see that there is that clear move to the upside with that momentum, with that volume, and then the traders were really interested in pushing the stock higher and higher and higher. I hope this first indicator was quite helpful, and it is a prerequisite for the rest of the indicators that I'll be talking about. In our next video, I'll be talking about MACD and RSI and how these indicators can be very, very good signals coupled with your price action analysis and volume analysis to snipe the bottoms and the tops in the market. If you like this video, remember to hit that like button, subscribe for more content, and leave a comment below with any questions or topics you would like to see me talk about in the future. Your feedback is absolutely invaluable.